This is Damon Stevens with FinWealth Builders. Today is Tuesday, August 16th, 2022, and this is Stock Market Update for our trades of the day. Hopefully, it was a good day for you traders out there. A lot of action today. Boy, there was something for everybody today. So, hopefully, you were able to have a positive day and you're prepared for the rest of this week. Let's get into it, see what's going on in the charts and what we see today. And that way, we plan out our day here as we get into the midweek. So let's see what's going on, and definitely subscribe, like our videos, and if you're enjoying this content, that way we can continue bringing this content to you in the future. So definitely stay with us. And then also make sure you went out to our website, finwealthlive.com, and there you'll see a link to join our free Discord, where we post the numbers before the market opens on what we're looking to trade for the day, when we're getting in, when we're getting out, and that way you know exactly what our plan is. And if you want to plan along or use our numbers, just do so at your own discretion, and make sure your trades are your own. I'd love for you to trade with us. Love to make money with us. Let's get into some charts here and some other things. Let's see what's going on. So looking at the overall market, you can see the Dow Jones closed up 0.71%, NASDAQ down 0.19%, and S&P 500 up 0.19%. Pretty mixed bag around the board. Except consumers was really good. Obviously, we had earnings come out with Walmart, Home Depot. Home Depot started down a little bit, but boy, it just rallied right back up there. Walmart did well. Walmart did well on their earnings as well. Target reacting to that. So is Lowe's for tomorrow morning. So tomorrow morning pre-market they open up, but they got a little bit of a rally started up based on the earnings of Home Depot and Walmart. So look for that tomorrow. If they run up too much tonight, obviously they're gonna have to pull back a little bit, which may give you a good opening entry in for tomorrow. So just keep that in mind. We also have Krispy Kreme, TJ Maxx, and Cisco that we're looking at tomorrow. So as we get into earnings reports, definitely keep those on your watch list. Looking at the E-mini futures right now, just to get an idea what's going on. You see the S&P 500 right now is sitting here, right around this 4,300 area. So that's the top of these candles right here. Now we have this big run up, which we had marked out before. 4384 would be the next grouping here if we get up into this area, and you see that there's grouping of candles there, but this is the next high. So now that we kind of punched through that and we've settled right on it, it's likely that we could continue to go higher. Now you can see before, back here in March, when we hit this upper deviation band, we pulled back. And you can see we pulled back, slightly off that, but then just continued to rally up. And so now we're into this other kind of unknown zone here. We know this candle exists here, and that's kind of what we've been chasing, is each of these candles up. And so it's obviously we could get it up to this area, but one of these places is going to be a huge resistance. I'm assuming this next one definitely be more for here, because you see we have one candle here that it's chasing up, but you have a whole group in the next area. So definitely could see some resistance as we get up to that upper area if we make it tomorrow or this week. Looking at the economic calendar for this week as well, you can see going into Wednesday, you have retail sales information. That will be very important. And you see that we have the FOMC meeting minutes. Shouldn't create, this is old news, so this shouldn't be a surprise or bring any volatility, but it's possible that it could. Also Thursday we have jobless claims coming out, so that's another thing that could possibly create a little bit of excuse to have a little volatility in this market. So just a couple of things to be aware of. Looking at S&P 500, so this is the SPY calls and puts. So these are people shorting the market in the red, people who are long on the market in the green. Let's see here. So this is for tomorrow. Let's go ahead and I have two of these charts, but I'm just gonna bump this up and we'll just cover it once. So looking at here now, you can see the ratio. There's 2.6 people shorting the market or on short contracts versus long. You can see these shorts too are like way down here, 405, 400, 390. So they're way down there. So max pain here you can see would be for the market to come down to 407, which means expecting the market to come down from here all week and really come down hard. I don't know that that's likely from what I'm seeing on the price action, but 430, that's kind of where the calls come in. That's kind of where they want to see it pushed. And we're closer to that level and rewarding all these people with calls open here than we are people who are down short. So just keep that in mind that all these are coming to expiration the end of this week. So if they don't want to lose their money, they're going to have to buy stock and help push this rally up to make up for these losses here. So that's where you get these little short squeezes going on, where you have these people covering their calls or their puts here, trying to short the market, and it doesn't work out, and they try to make their money by buying and riding the rest of the market up. So it's kind of goes the opposite direction you're hoping, but that's how they cover. Is just they start to buy, and that makes the whole market go up. So just expect that could be a possibility as well as we're getting in here, as we get these little short squeezes where people are trying to cover these losses that they're going to have at the end of the week. Lost a file. Okay, so looking at Microsoft on a daily, so you can see Microsoft continues to rally up here. It's kind of in this grouping 2 days in this little zone here where we have a gap to fill. So looking for Microsoft to go fill that gap, clear up here around 296, just over 296. So I think it's very possible. This candle's kind of engulfed in this one here. So we got to have another breakout here, but definitely got a bull flag started here, and it's holding. So we'll see if we can keep that up. It hasn't broke back down yet. On Amazon was in this little area here for a little over a week, which was resistance before. Broke up. This is a huge area for Amazon to get into, and it looks like it tried to break through it today. Closed out right on the bottom of this. So if it gets into this zone, there's a huge run up here that we could go, clear up to 158 area if we want to climb the next series of these candles. Now, it could come down and maybe just it fills this candle. And so I'll drag these down here, but just so you can see. So here's kind of the next candle here to run up, and then here's the next one, and there's a big group. So this should be resistance up here. But you know what? We got a little bit of a run here on Amazon to fill that. On Apple, see this grouping up here? We're coming up to that group as well. And so that's at 174.63. We get into this area of resistance as well. And we have a little bit of a gap it looks like it's going to fill if we continue up. But this candle was engulfed today into this candle. So looking for a breakout above 173. Chipotle broke through our next zone. You see we had this kind of laid out here, each of these candles as we're coming up. And so now we're in this upper deviation band without rejection. Look at this, just huge, strong run on Chipotle. And so we're at 1714 right now, which is about halfway up this candle. So we'll see if we can continue to close this candle, 1740 area up here. And if so, then there's a little bit of resistance in this next zone that we're coming into. But just a huge run on these stocks, just amazing. And the volume's not huge. The volume's low even, which is what happened during the pandemic. We went to all-time highs in the market during what looked like a bad time in the history of the world, but the market hit new highs. It didn't care. It just continued to climb, and that's exactly what we're happening now. NVIDIA, see we had this run up, a pullback, a run up, and this was engulfed here, this candle, and look at this huge fall down here. So it just pulled way down here. I don't know if that's going to happen again, but you can see we're kind of the same situation where we're kind of, had resistance right here. So we'll see if NVIDIA can continue to run up. It has not been successful breaking up into this top of this breakdown candle here, but it's a breakup candle. So we'll see. That was obviously resistance up here before. You see a big group here, ran up here, failed, and came back down. So we'll see, does that happen again? I expect the area to be definitely resistance. Obviously, if it failed before, it's got to have some energy to get through there. And you can see volumes continue to remain low. Definitely continue to like our video. Watch your video too on the front. That'll tell you, if you watch this little video on FinWealth Live on our YouTube channel, gives you a little bit of information about our company. And also, if you go to finwealthlive.com, you can, again, join us on our daily routine as we're looking at the market open and seeing what opportunities that lie out before us. Okay, so now looking at this is just to give you an idea. So this is S&P 500 stocks, all the stocks that are grouped in with S&P 500, the 50-day moving average, which is typically where, stocks get above that, they're bullish. And you see right now where we're at 91.84, so 90, almost 92% of all companies in the S&P 500 are over the 50-day moving average. So that tells you how strong this market is and how much we're kind of really recovered already from a bottom that we put in back in June. So just huge, huge support here for all these companies. And so you can see why the market's rallying so hard. And now the other thing we look at is the 10-year yield bonds. So if this starts to going up, I'd get a little concerned that the market's going to probably come back and pull back a little bit. And you see we're just sitting here under this 20-day moving average, and we're under the 50. So I keep this on here. This is just kind of my gauge to see, does the market still have room to run? And it hasn't jumped up there yet. So just something I'm keeping an eye on. And this is the 2-year. And 2-year, you can see this big bull flag growing here. But we haven't broke through. So this is the other one I'm watching on the 2-year yield to see if that breaks through. If it does, then I'll know that the market's ready to probably pull back here. Dollar, it's elevated. It's trying to break through. If it breaks through, again, another sign that the market's probably going to pull back. So you see that there's a lot of things banging up against the top of the ceilings here on these indexes. Just watching for one to break to give me a sign that this bull run may be over for at least a moment. Looking at gold here, gold's pulled back here, back sitting on the 20-day. So this is going to become a zone, this candle right here, kind of a zone for us. I'm going to put one of these candles right, or one of these lines right here, because obviously this candle's engulfing all of these candles here. And so these got to break out either above this candle wick, this wick here, or break below to give us some direction on what it's doing. So gold's kind of probably in this little range right now for a while. US oil down here at the bottom just continues to, try to get in, and then it failed, and now it's back here in this little downward trend again. So US oil still showing weakness. The VIX continue to come down through this tight channel that we have drawn out here. So it's still in there, that zone, which means as long as it continues to go down here, the market continues to rally. S&P 500 on a daily chart is continuing to grind up higher and higher. And so it's doing well. So we'll see how far it can go. Again, we're in this, we got this, we don't have a whole lot on the S&P 500 right here up to the top of this candle, 437. So that's why I'm looking at, this is a possibility to run up here. But I do think it's going to get a lot of resistance when it gets up there, if it makes it. Because this is a huge group of candles where this is just a single candle that it's climbing right now. Looking on the weekly chart, same thing. See all these candles within this zone here. So we're kind of right into this area right there, right at the base of it. So definitely can see it getting up to, this is 436.76 in this area on this candle. So we'll see. It's going to be kind of in that zone that we should see some resistance. Triple Qs, see that little grouping we talked about in S&P 500? So the triple Qs has it, a little bit further down. It's closer to that grouping. It's right here at the top of this candle. So next grouping is this one. This is going to make it a little tighter. And we're also in the upper deviation band. So looking for a pullback at some point here. Semiconductors right on this candle right here, 249.12. You can see kind of we broke it, and then we came back down and we closed a little bit below it. So showing a little weakness here. Tried to break through, didn't hold it. So it can try to break through again. You see it did try it here. Tried it 3 times here. Still failing. So we'll see. You can see that it kind of tried 2, 4, 6, about 8 days before failing. So we have a few more days to try to break through that level on the semiconductors. But right now it's holding it down. Russell 2000. The Russell 2000, we had this little grouping here. This should have been a big area of resistance. It's been just kind of slowly grinding through it. We're at the top of the last half of this candle. Let me pull this back here. So there's a lot of candles within this range here. So if we can break above this 204 range, then obviously we can go higher. But we are also right almost to the edge of our, you hit 204.04, we're going to be at the top of this other deviation band, or final deviation band. At that point, I would expect some type of pullback. So that's what I'm looking for there. On the financial side, it's just grinding up here. But you see, we try to spike this area, 35.65, pulled back. We're still sitting a little bit above it. So that means we got this next range that we could possibly start to go into. So looking at, possible further upside here. But again, if you look at right where it tagged and pulled back from, right on that deviation band. So we're right at the top. We tagged it, pulled back. So we'll see if we can break through 36. But that should be a pretty good area of resistance, just because we're at, highly extended from the center. So looking at XLV, you can see here that it continues just to grind up. We're kind of on this little candle here. You can see that we just closed out the top of this candle. So that's what I'm looking for, is just kind of candle closures as the market continues to grind higher. So you can see we're right here where we closed for 2 days. And it's right here at the top of the candle. So this would be the next candle to climb. If we make it to 134.85, would be the next one to get up to. And then again, if we can keep the rally going, 136.81 up to this candle, 138.74, we'd be getting the upper deviation bands at that point. Still not the high though. But you can see we just started gradually trying to push our way through. So we'll see if we get through this resistance area. Obviously, it's held for 2 days. We'll see if we have more momentum to get going. Energy, looking at the energy sector here. See, we tried to break through, failed, came back. We're to it again, try to hit it a few times. So we're kind of really at this candle right here. And this will be the next candle to break through this 80.92 area. So we'll see if we can get through. So obviously, this is becoming resistance for it. So we'll see if we can break through it. But right now, it's got to have some more momentum. Again, if you look at it, it's the same thing happened back in 2020. Is the low volume didn't matter. It didn't matter if we had the institutional volume coming in. We just continue to climb. Bitcoin, you can see here, try to hit that top, pulling back a little bit again. Big, huge area of resistance. That 25,000 just tough on Bitcoin. Ethereum, pulling back a little bit here towards their deviation bands. So you can see that line there. Let me kind of draw that out so you can I'll put a line right here just so it's right along this deviation band here. So you can see that's where, we're probably going to come in and possibly put a wedge in here on Ethereum. And you can see this was a big area right here of consolidation. So you're seeing that same thing happen here. But that's our stocks, our cryptos, the things we're looking at. Definitely looking at, a possible more upside tomorrow. You can see that when we hit the 200-day moving average on a weekly basis, we pulled back hard and then came back up towards it again. So we'll see if we can continue to rally up here. Right now, the market's showing strength. We know we have a lot of people shorting the market still, which means that if they start short covering, they're going to help us to create a squeeze to take us further up before finally coming back and putting in some type of higher low, which is due anytime. So we're just looking for that. But we'll continue to play the market as it continues to go up on this bull market and enjoy what it gives us. Everybody stay safe out there. Definitely join us in the morning. Everybody have a great night. We'll talk tomorrow night and see what's going on for the next day.